Good afternoon and welcome to the webinar for the ClockOn Online 2022 End of Financial Year process. Please be aware that this session is being recorded and that a copy of the recording will be uploaded to our YouTube channel shortly after the session has been completed. An email will also be sent to all registered participants to advise as to when this is ready. In this session, we'll be covering our end of financial year process, as well as some common questions that were asked around this time of the year. Also, we have ClockOn team members noting down your queries in the session's chat. So if you have anything that you don't believe we've covered or you would like further information on, please let us know and we'll put aside some time near the end of the session to cover these points for you. Okay, let's get started. So we'll just bring up ClockOn. Right, so the first thing we want to do is we want to do a little bit of house cleaning around the settings that you're sending through to the ATO for end of financial year. So first of all, we want to ensure that you've actually completed your financial year in regards to payroll. So there's a couple of ways you can check this. First and easiest would be just to go to payroll and just create a period in here. So just create a draft period and just have a look at the next period in line which is going to be processed through the system. In my case, I'm doing monthly payrolls in this data. So the next payroll to be run is the 1st of the 6th to the 30th of the 6th. And the payment date is on the 1st of the 7th. Now the ATO goes off the payment date. So this payroll, if I was to process it, would fall into the new financial year. If you've already done this and you've already started processing payrolls in the new financial year and you haven't done your end of financial year process yet, don't worry. ClockOn will still allow you to do your end of financial year process for the previous financial year. You can actually go in advance of that and then come back and do the end of financial year after the fact. We don't make you reconcile before you can continue. So I might just remove that payroll out. We don't need that there at the moment. The other way you can check to see whether or not you've done your end of financial year is to use the reports. So I'm just going to bring up the reports manager and pick one of the payroll reports. So maybe payroll summary period detail, just as an example. Then in the payroll period section, I'm just going to set it to previous financial year. Then click load. And then if I click this drop down here, it'll tell me the periods which are being included within the financial year. And I can have a look and see, okay, I've got January, February, oh, that one there is outside of it, sorry. So I've got my payroll periods there. And I've got the 1st to the 5th to the 30th of the 5th, and that's the last payroll in which I've generated. So I've done my year. Okay, so once we've confirmed that, the next thing we need to do is just check on our employee details. So we can either go back to the main screen and just click on employees here, or we can jump straight to it using the menu item up here and go employee details. From here, we can select the employee in which we want to have a look at. So we'll just have a look at Fred Blogs. And we want to check things like the employee's name is correctly set in the system, their address, their date of birth, their phone number, employment start date. The employment start date is located on the categories tab. Under date, sorry. So there it is there. So employment start. So you can double check it there. We've also got to ensure that the employee's tax category is set correctly, because that is now sent through to STP with STP version 2. And we've got to ensure that the tax file number is set correctly. This is demo data, so it's just on default settings at the moment, but normally you'd have the employee's details there. So you'd want to go through and just check all your employees in that regard. Another thing you might want to check is under the Setup Additional Settings, you might want to check the Stp Details. So this covers off your details for submissions to the ATO. So your contact name for the business, the primary contact that's responsible for doing STP submissions, phone number, street address, city, state, postcode, and email address. That's actually a mandatory field. You need an email address in there. And yeah, so your company name and ABN and branch number are also up here. So if the company name and ABN and branch number are not correct, please contact our team at support@clockon.com.au because adjustments may need to be done to your account. Once you've confirmed that detail, the next step is to go and have a look at the year-to-date details for the employees. And to do that, we need to go through to the employee details again. Select the employee and select the option for year-to-date balances. This will bring up what the employees have actually earned within the financial years. So we've got this financial year here, the 1st to the 7th, 2021. If we edit that record, it will bring up a screen in which you can see the gross wage before tax adjustments, any lump sum payments to the employee, etc. Super details, any cashed out leave, foreign employment, overtime, child support. We can also, if we click on this tab up here, allowances, see any STP allowances that have been paid to the employee within the payroll. Now, as a general rule, with a couple of exceptions that we'll go through in a sec, you don't want to directly manipulate these figures. These have been produced within payroll, and changing them will cause a mismatch to what you've actually done within the payroll system. It's better to do adjustments in payroll than to manually change these figures. Now, the exceptions that I was talking about include the reportable fringe benefits, which is right here. That's not calculated at payroll. That will need to be manually entered if that is a thing for the employees. The other ones that will need to be manually entered are the, I'll just click off that field, are the exempt foreign income and foreign tax paid. If you have any amounts that qualify for this, and you might need to contact the ATO if that is the case, then you can enter them there. Right, so once we've checked all the figures, what we can do now is we can actually do the end of financial year submission. So we'll just come back to the main screen. So you would do that as a standard STP submission. So if we go to Single Touch Payroll, we'll get this screen here. We can then go to Employee Update. You would then pick the ABN in which you're going to be doing the submissions for and the financial year. Keep in mind that now that we've moved into the new financial year, we want to make sure that we change this option to the correct financial year for the end of financial year submissions. If you do accidentally do this financial year rather than the previous one, don't panic. We can actually fix it. It's a checkbox in the year to date screen, which we just need to turn off, and I can go over that in a second if you like. And then it's just a simple employee update, and that will turn off the finalization for the employees for that year. But anyway, we'll keep going with what we've got now. So let's just pick 2021 to 2022. We want to turn on the option for final payroll indicator. By having this on, it will mark the MyGov accounts to be tax ready. So when the employees go on to do their tax through the MyGov system, they'll get a green line to say it's all well and good and ready to go. So then it's just a simple case of next. It will come up with the employees' names, whether or not they've been terminated, whether or not they've got a valid tax file number, and whether or not you're including them in the submission. So there might be some instances where you don't need to include them. They may be contractors or something like that, where you can untick them here. And then we can go next. You will get also, if there are problems in here, you'll get a chance. It'll show you what's going on and it'll give you the chance to fix them. So if we go next here, it'll come to the submission page and we can just submit that through. And it comes up with the standard reports here. So if we generate the STP report, we get the report that goes through to, we get the report of what the figures were that were submitted through to the ATO. And that's it. You've finalized your end of financial year. So going a little bit further into it, we might want to reconcile the figures. So we'll have the reports. We can produce a PDF of that report. I might just generate that report again and just show you how to save that if you want to save it to a PDF. So we've got this option up here. If we click on this, we can export that report. So if we go to PDF, and it will say, it'll bring it up as a PDF and then you can save it from there. Now we might want to reconcile those figures. So just okay, so I've got a PDF that I've already generated for those figures. So we'll just bring this up just so we can have it a little bit separate from the actual web page itself. And we'll hide that. Actually, before we do that, we'll just come back here. So we might want to reconcile the figures. So there are some reports that we can go through in the system which will give us the figures from what we've generated. So let's just go to reports. And one good one for finding out what you've actually processed for the employees for the periods in question is the Payroll Summary Period Detail Year-to-Date Adjustment Report. If we go to this report and generate this, so we'll just go again, load previous financial year and preview this one. This one will give us a detailed report of what the employees earned within the periods and a total per employee. So in this one, the employee Fred Bloggs had a gross wage of $39,272.94 and a total gross of $47,401.20. So these amounts include everything, including the STP allowances. Everything that's before tax will sit in this figure here. So we'll go over that in a bit on how to interpret the STP reports and how to reconcile them back to this report. We'll just come back to ClockOn here and go back to the reports, and the STP employee summary report, say if you forgot to save it at that particular time and you want to regenerate it, what you can do is if you pull up the Stp Audit Summary report, it will give you the dates of which you've done the STP submissions on. And this date here, the submitted date, is important because it's what we use for the, just go back. It's what we use for the STP employee summary report parameters. So here, instead of payroll period, we're actually using the submission date range. So if we go to custom date range and run that, we will get, I've left it for today because that's when I did the submission. We're able to regenerate the report from the system. All right, so we'll go back to reports. Now, another useful report is the Allowances and Deductions report. So we'll bring this up. This is used for troubleshooting allowance amounts that you may have paid to the employee if you're not sure where the figures are going or what's going on. So what we'll do again is we'll just go previous financial year, load that, and we'll leave everyone turned on it just so you can see what's going on and preview that. Normally when you're trying to troubleshoot with this, you might want to select a single employee just so you can see in, say, a one-page sort of format what's going on. In here, however, we can see the allowances that have been processed against this employee. We can see whether or not they were before tax, a pay disbursement, or a before tax payment, allowance or payment. And we've also got a column here to show whether or not they were processed as an STP type. So in this case, this one was processed as bonus and commissions, pre-tax amount there. So we could add these figures up here to find out how much the bonuses were. And again, that allows you to sort of diagnose what's going on there. Another report. Oh, that's getting in the way. What's going on? There we go. Another useful report is the Superannuation Fund Summary payment type. I think that's supposed to be additional. We'll just click on that and we'll just go previous financial year and load. Again, this previous financial year option is pretty useful. If you're going back a year prior to the previous financial year, you can also use custom date range as well. And just set that, remembering again that it will use the payment dates to determine which period that it's going to include. Again, it'll use that date there. This report will give you the super that's been paid to the employees, or rather that's been calculated in ClockOn, in the different columns. So we've got the super SGC, any RSEC additional payments, any salary sacrifice or co-contributions, and it'll give us a total super amount there. It'll also give you this by super fund. So if you've got super funds set up in your system, you'll be able to see it broken down in here. So this one's just called no super fund. I might have default super fund, or I might have another company's super fund here, and it would split out the amounts based on where I've actually processed it to. Okay, now that we've had a look at this report, let's pull up some examples. So what I might do is I'll just bring up that STP summary report. And we'll have a look at John Dash first. So let's just have a look at his figures here. So he's got, if we were to pull up the payroll summary report, so let's just pull up the payroll summary report for the previous financial year again. And let's look at John Dash. I'm going to have to move to the next page because his totals are here. But if we have a look at that compared to his STP report, and we'll just stick to total gross at the moment, you can see that one there. That's why it was so different. We can see that his total gross here is 37,410. Now on his STP report, it's only showing a gross wage of 34,960, and the discrepancy can be, it's not actually a problem, because what that figure is, that gross wage figure there, is the separated amount for the employee's gross wage plus allowances, but it doesn't include things like anything else that's also provided information within this screen. So in this case, to get that figure of the 37,410, what we would do is we would add the gross wage with the overtime, and in this case, the other paid leave. So in this case, the employee's taken some leave and had overtime. If we add those three figures together, we will equal the total gross there of $37,410.40. Now to move on to a little bit more complicated instance. So if we go to Fred Blogs, for example, and we'll just move back. Yep, here we go. And I'll just bring up his STP report again. So in this case, the employee's got a total gross of $47,401.20. If we have a look at his STP employee report, it's only showing, again, an amount of $37,111.44, which doesn't meet the, obviously doesn't match up to that. So again, we need to add. So gross wage plus other paid leave plus bonus amount. The bonus was listed as a before tax allowance passed through to the PAYG location for bonuses and commissions, as we saw previously on the Allowances and Deductions report. So adding those three figures together, we get the gross wage of $47,401.20. Now, with the STP allowances, you might have an instance where you're paying it as an after-tax amount. After-tax amounts to STP, if it's an STP type, will show down here, but for those ones you wouldn't add it on to the gross wage because it's after tax. You wouldn't include it on gross. So again, the Allowances and Deductions report is good for showing you where those sort of situations lie as well. Now, another point to make on this one, actually, what I said before was slightly incorrect in that plus that won't equal that. The reason being is there's a salary sacrifice amount for this employee as well, which you would add those figures together and then you would deduct the $5,400 for the salary sacrifice to get that to balance. Apologies for that. Because the salary sacrifice will come off the gross. Right, so now we'll have a look at another employee. We'll have a look at Abby Normal. And if we have a look at this employee, we will notice that we're getting, if we add the gross up for this employee with the travel allowance, which is before tax, we get a scenario where the ordinary time earnings for this employee are still sitting at exactly the same as the normal gross wage. And the reason this is, we'll need to investigate as to what's going on and what the reason is for that. So if we have a look at the employees' allowances, so we'll just edit the employees' details and bring up their card file, and then we'll just go to pay, and we'll just edit the allowance set and expand out the travel allowance itself. Now, most common reason for this would be that under the options section here, the allowance might not have been turned on to include in super earnings base. So if that's the case, the employee wouldn't have been considered for super for that particular allowance. So for future reference, you could turn that back, you could tick that on and click save. And for future payments, that allowance will be included in for super, and the employee will get super on that and it'll be included in OTE. Now, we may need to do a super correction to fix it up for the financial year, and we'll go into that in a sec. Right, so again, we need to do an adjustment to fix up that employee's super details and OTE. So first thing we need to do is we need to create a payroll, and we can create an additional pay run in here to do the end of financial year adjustment. So what we want to do here is just come to the payroll screen, click create, and then we want to tick on this option for additional payroll. We don't want to do it for the next payroll in the cycle. We want to customize it. So your payroll cycle will still be the same. So we need to think about that when we set the start date. So let's just click on this little option here. And because I'm running it monthly and the payment date will reflect as such, I'm going to set it to the 1st of May. So the payment date will be the 1st to the 6th, so within the previous financial year. And I'm also going to tick on this no entitlements option here. What this does is it stops the employees from accruing an additional run of leave. I've generated the payroll now. So now what I can do is I can select the employees in which I actually want to do the adjustment for. So by default, they're all turned off. I want to make a change to Abby. So I'll tick her on so she's included in the period. And then I can go options and payslips and see what's going on within the payroll itself. So by the look of it, the system thinks she should be paid an amount of $250 as an allowance. So let's just expand that out and see what that is. So that's our travel allowance. So we don't want to pay that employee that amount again, so we'll untick that. Now, we want to correct the super for the employee. So what we'll need to do is we'll need to work out what the super was on that amount. And then we can simply just come down into this section here for super and manually enter it in here. So the amount that the employee got for that, if we come back into here, was $2,700. So last financial year, the super rate was 10%. So 2,700 times 0.1, $270. So all we need to do is enter 270 in here. And that will increase the amount of super that the employee is going to get within the financial year. The next step to fix that up would be to actually adjust the employee's year-to-date balance. So if we come into the employee details, sorry, not employee details, employee year to date. And I don't think it's going to let me do it on this particular screen. So what we might do is we'll just close out of the payroll for just a second and go to employees, year to date balances, and edit that. And we'll need to manually adjust the OTE up by that 2,700. Reason being is that amount was calculated outside of payroll, and this is a correction. So this is one of the rare occasions where the manual adjustment is fine to do. So that would come out to an amount of 75356. And we'll come back to the payroll and we could process that, so we can view it again. And process that, and that will fix up that employee's super. I'm not going to process it just yet because I want to go through a few more adjustments that we can do in the payroll. So let's just go back into that payslip. And let's have a look here. Right, so you might have an example. You might want to make a put an amount of the super through to an RSEC amount. So to do that, we need to set up an allowance. So let's go menu, allowances. And we've got our travel allowance there, so we're just going to add a new one. Super RSEC. And then we can set the process as field to year to date super RSEC additional. And then we'll just leave this as $0 here, and we'll set the pay period to the per period to pay period. And what this allowance will do, it'll give us an additional option within the net allowance section in which we can reallocate some of the super through as RSEC instead of being SGC. So we might want to say, okay, we're going to put $500 of the SGC into reportable employee super, so we can reallocate it. So an example of why you might want to do that is the current rate might be 10%, but you're paying the employee 12%. You've calculated what the difference is for the financial year within your super, and you just want to make an adjustment and make sure it's reported correctly through to the ATO. Another thing that you might want to do is you might want to do a director's fees payment or a bonus payment. So again, under allowances, we want to add a new one. So director's fees, we'll start with that one, and we'll change so it's before tax allowance. We don't want to put it to gross wages and salary. We want to set it as allowance. So this shows another field in here for STP type. If we click the drop down for this, we can select from several different options, and these will show on the as separate items on your STP reporting. So if we select director's fees, and you can either do it a set amount per week, or you can leave it as $0. Benefit of leaving it as $0 is that when you come back to the payroll here, it won't reoccur. We can, it's gross, that's right. So it's up here. So it won't reoccur. So it'll be $0 on here unless you come in here and manually set an amount. If I was to set a dollar figure amount on it, I would get what this allowance is doing, where it's setting that amount automatically for me every payroll. Now that might be desirable, it might not be. So you might want to customize it each time, or just pay a set amount. So it's up to you in that regard. So that's the director's fees one. And likewise, if we come back into the allowances, bonuses are exactly the same. So if we add another one for bonus, before tax allowance, select the PAYG location allowance and bonuses and commissions. And again, we can set an amount here, or we can leave it as $0. Also, if the amount's being included in super, again, remember to click on this options box and tick on include in super earning space. If you don't do that, the amount will not be included in OTE, and it won't be considered for super. Director's fees needs that as well. Now, a common question that we get is, okay, I've got director's fees on my payroll. I want to salary sacrifice the amount for the director's fees. So to set up a salary sacrifice allowance, what we want to do is we want to go allowances and add, and we can just call it super salary sacrifice. And then if we change the type section here, we've got some options in here. So You got options for child support garnishee, so court mandated child support or voluntary child support, employee salary sacrifice, so not going to super but salary sacrifice, or super salary sacrifice or co-contribution. In this instance, obviously, we're just going to select super salary sacrifice. And then again, we can set the amount, the per period if we want to. We can set it to a super fund if we want, and set a fund number if we want to in there. And we can set whether or not the amount is to be included in super earnings base. Let's just save that as it is. And then if we expand out the allowances and deductions, we've got the allowance there. So if we wanted to say we had an amount of $1,000 for director's fees, got a gross payments of $1,000, and in here for salary sacrifice, we could just simply put $1,000 there, and it would work as a deduction. We might just set that back to 0. And we might just reset the payslip for just a second, just to make sure that the super is calculating correctly. So let's put $1,000 on director's fees. We've got $100 worth of super, great. And $1,000 on super salary sacrifice. We've still got $100 of super, that's correct. The director's fees still attract super as per normal, and you cannot use, according to the information we've gotten from the ATO, you cannot use salary sacrifice or super salary sacrifice to reduce your requirement for employee super. So it's actually showing correctly here. We'll turn that one off just so it doesn't confuse anything. So we've got the 1,000 there, 1,000 there, deducting it off. So 0 gross wage, but $100 for super. And $0 net payments, because it's all being sacrificed. Okay, and from there we could process that through and finish that up. Right, so some notes for the new financial year. They've made changes to the super percentage rates. So if we come into, just to explain that a little bit more, the super percentage rate in the last financial year was 10%. They've now shifted it to 10.5%. In previous years, what you had to do is you had to come into the rule sets, edit, go to the super section here and manually change the percentage rates in here. We've now got a feature to do this automatically for you. So based on the financial year the payment date falls in for the payroll, it will actually auto apply the change for the super percentage rate if you've got this set to automatic. So it's usually a good idea to just go through your system and just check the calculation methods under the super section here to ensure that they're set to automatic. If you have an employee that, say, you're paying an additional amount of super to, so you've got an agreement with them to pay them, say, 12%, just as a complete example, what you can do here is untick or change this to manual, and you can manually set it here. So I could go 12%. And just keep in mind that by doing that, you're disabling any kind of automatic changes to the percentages. The other thing that's changed is they've removed the super threshold amount of $450 in this financial year. Again, with the automatic setting, if you were to do a payroll in the previous financial year, that option would be turned on for that particular payroll. So it would require that the employee has $450 within the month to be entitled to super. Again, if you were to change it to manual, then whatever field is in, whatever value is in here would be whatever the system is using for any kind of payrolls. There's also been changes to the employee's minimum wage. So if you're paying to the minimum award wages, you might want to check with your governing body. A good website, if you are paying to the award, that is useful would be Award Viewer. And what we might do is we'll just bring that up just quickly. I usually just search for Award Viewer and then the awards code. It's usually the easiest way to find them. And then if we go in here, you can bring up the award and you've got minimum rates, and you can work out what the employee's rate is and attach it to their profile. So again, to attach it to an employee's profile, it's a simple matter of just coming into the employee's details, edit, pay, and setting the hourly rate. If they're on a salary, this field will be grayed out and you'd have to enter the salary in here. The salary is calculated the hourly rate in this instance is calculated based on what we've got in here times 52 weeks in a year times whatever we've got within this working week section here, and that gives us the estimated yearly salary for this employee. If you've got an employee on a salary, it'll be the reverse. So you'd set the yearly salary, it would divide it by 52, and then it would divide it by 38 hours in the period to give you the hourly rate for the employee. But yeah, check with your governing body as to the requirements, check with the ATO as to the new hourly rates, and just ensure that you're paying your employees properly so it doesn't come up with the ATO. All right. So that's all we've got at the moment. So I might just have a look and see if we've got any questions that have come up. I'm just having a quick look through the chat. Just bear with me for a second, please. All right, so I can't see any. Oh, wait a second. Right, so yes, the only question that's been posed is whether or not there's going to be a recording for this session. Yes, there is, and it will be available on our YouTube channel shortly after the session. Another way you can get to that recording would be through our help guide. So if we come up here to the support button up here, this will bring you to our help guide, and in here, if we go to processing payroll and STP, there's an option in here for processing end of financial year through ClockOn, and it will replace this section here once it's ready to go. Again, for all registered participants, an email will be sent out to you to advise as to when this will be ready and when it will be available within this guide. Also, as to written notes, there was another question as to whether or not there'd be written notes. The written notes are in this article in here. And again, you can come back and have a look at this recording. We've also got a frequently asked questions document, which can be accessed here for some of the common questions. Well, for example, how do I check to ensure my end of financial year has been successfully submitted? You can do that through the STP screen just by clicking View History, and then it will bring up a screen which you can check to see whether or not the submissions were correctly done. Also, fringe benefit amounts, reports, etc. All right, so were there any further questions? Right, so you're able to, if you've moved to, someone's put one up there saying, how can I finalize STP if I've changed systems? So if you've changed from one system to ClockOn, you'll need to do the finalization on the previous system first, and then a finalization on your ClockOn system to correct to enter the figures in to finalize the figures for the financial year in one, and then finalize the figures for the financial year in the other. If you've got a scenario where you've cleared all the details out of one, you'd still need to submit 0 amounts for that one if you've processed everything again in another system. Okay, I've got another question here. If an employee was taxed as a foreign tax resident, but should be a tax resident, what should we do to adjust no tax before processing STP? So you're wanting to basically remove the tax for the employee, is that correct? All right, if so, then what you would need to do, you would need to, okay, I'm not sure if I'm understanding that question. If an employee was taxed as a foreign tax resident, so the employee, if you had a foreign tax amount for the employee, you would specify it under the employee's year to date. So if we come back here and go to year to date balances, and under exempt foreign income, you'd enter it in here. Also, if the employee wasn't already set up as a foreign resident, you'd want to also come into the employee's profile, set the gross pay type to foreign employment. Right, another question is in regards to, can I redo the finalization for a previous year? The answer is yes. You can do it as many times as you want. When you process an STP through to the ATO, you're essentially replacing the employee's current details with what you're now submitting. So if you did have a problem and you need to do an amendment, just follow the normal STP submission processes and it will fix it up on the ATO's end. I think I may have forgotten to go through something else, so let's just go to the employee details again on how to unfinalize the employee's STP submission. So say if you've accidentally submitted the end of financial year for the current year instead of the previous year. So to change that, what you'd do is you'd go into the employee's year-to-date balances. You'd select the financial year in which you want to remove the finalization for. So I've only got one in here at the moment, so I can just go Options, Edit. And then under, right down the bottom here, there's a Final Payroll Indicator option. If I turn that off, and click Save, and then do an STP submission for the employee, that will turn that off for that financial year. So by STP submission, I mean an STP employee update. So if we go to Payroll, Export Single Touch Payroll, Employee Update, and select that particular financial year and not turn the Final Payroll Indicator on. If I turn that on, it's going to turn it back on for the employees. Next and Submit, that will update the details to the ATO with the new figures, and it will, because we've turned it off in the year-to-date screen and not included it here for the new financial year, it'll turn off that tax ready tick. Yes, just clarification with the STPs. If you had multiple systems, yes, you could potentially duplicate between the two systems. If you've each payroll system counts as an individual submission. So if you were to close off on one and say start with ClockOn, the amounts that you've already submitted on the old system still exist on the ATO side, and you would start fresh with ClockOn. If you've started from the get-go with ClockOn, you may need to either roll back or do an adjustment payroll to correct your financial year figures. If you do need help with that, I believe we've got help guides on that, or you just contact our support team at support@clockon.com.au and we'll be happy to help. Right, that's it for the questions so far. Is there anything else anyone else would like to ask me while we're on this webinar? Okay, in that case, we'll leave it there. Thank you for your time. Oh, how do you do it? Sorry. There's one more that's just come through. How do you do an adjustment payroll? Right, so we have already covered that, but we'll go through it just briefly again. So if we come into payroll in here, we'll just remove that one there. Again, it was just create additional payroll and set the start date. So in this case, I'm making sure that the date will fall into that particular year. Ticking on the no entitlements option to avoid accruing any kind of additional leave balances for this period, and create. And then we can tick the employees that we want to make the adjustments to and view the payslip details. Actually, one thing we didn't go through on this is how to do a year-to-date adjustment allowance. So we'll just run through that quickly. So in this one, we've got the bonuses, directors' fees, travel allowance, super salary sacrifice. We'll just take those off just briefly. So we'll just get rid of those just to simplify things a little bit. And we'll get rid of the travel allowance as well. And we'll just go add. And we're going to use the year-to-date allowances in this case. What the year-to-date allowances are good for are they allow you to do an adjustment outside of payroll. So we don't need figures on the payroll itself in order to do the changes. So we might want to do a year-to-date before tax allowance to correct a gross wages and salary issue. And we'll just go save on that. So in this case, that particular, oh, I didn't give it a name. Okay, hang on one sec, just so we can trace it a bit easier. Year-to-date gross correction. Again, the names are important if you're giving your employees pay slips, because that's what it'll show as to the employee. So if we expand that out, now we've got this amount in payroll. If I was to put, say, $1,000 on it, there's no payments to the employee because it's a year-to-date correction. There's nothing that's actually going to be paid. This will just adjust the employee's year-to-date balance outside of payroll. Now, if you were to do a deduction, the employee obviously has to have at least that amount on their year-to-date screen. You can't deduct beyond zero. But yeah, so that's how you can do year-to-date corrections within a payroll itself. And if you need to, you can do adjustments. Say if we wanted to move, say in this example, maybe we had a travel allowance amount and we'd accidentally put it to gross wages and salary, and we want to instead allocate it through to allowances. So what we could do is we could call it tax travel allowance correction, and add another additional option in here, and we'll just call it STP, something like that, just to separate them out. So in this one, say we've accidentally put it to gross and we want to deduct it out, what we can do in here is just change it to a before tax deduction from the wages and salary area. And on this one, we want to do as a year-to-date before tax allowance and point that to allowances, and then we can set an STP type. We'll set it to travel just for this example. So that will take an amount of whatever we put against the before tax deduction and add it in as an allowance amount to travel for whatever we put against that one. So let's save that. And again, the year-to-date allowances, so they're not going to affect the actual payroll itself. So the STP amount, we can just say, okay, we want to reassign $1,000 from the gross and put it in as an STP allowance. So yeah, there's other options in regards to year-to-date allowances that you can use, but that's essentially how they're used. You generally need one to take it out of one area and another to put into another area. So you can do that for taxable amounts. So if you need to adjust the tax, you can do that there. You can do it for super, year-to-date super additional deductions. You can do it for correcting salary sacrifice, correcting employee salary sacrifice as well. Right, so we've got another question. How do I notify the ATO when an employee has left during the year? Exactly the same process. What we can do is if we go to single touch payroll, you can either leave it until the end of financial year is due, but if you want to do it sooner, what you can do is you can come into employee update, select the correct financial year. In this case, it'll probably be this year if they've left within this year and you want to just tax ready submit it earlier and then go next. Oh, there's no payrolls in this year, so there was no employees in the list, so I'm just going to flick it over to the previous one. And then you can simply select just that employee, next, and process, and that'll allow you just to finalize just that one employee. By the way, that view history option that I was showing you before in the documentation is right here, just on the first page of the single touch payroll wizard. If we click on that, we can see every STP submission that we've got and whether or not it was successful. If it's showing as red, there's been a problem, so you can click on it and click the results option here. And this looks like a little bit of gibberish to most people because it's basically the response from STP itself. But if you scroll right down to the bottom, it usually gives you a error code or something along those lines down the bottom in there. So it might have been that an employee's tax file number wasn't entered correctly or didn't exist or something, or there's a phone number missing or a contact name was missing or any number of issues, but it'll give you an indication of what's going on. So it's a good idea just to come in here and check these submissions every now and again, just to ensure that everything's green and A-OK. All right, any further questions? Okay, all right, so if there's nothing else, we'll leave it there, and thank you for joining us today. All right.